Hey everyone, thanks for joining again. This is part two of multifamily underwriting and analysis for beginners. Today we'll be talking about the operating statement. And watch out for the subsequent videos that'll be released as I review all the relevant financial documents you'll need to be familiar with when it comes to underwriting for real estate investments. All right, so let's get this party started here. What is an operating statement? Well, it's a detailed summary of the income and the expenses for a specific property. And if you're prospecting a certain property, you're thinking about buying it, well, the seller should provide these statements to you. And if they don't or they won't, well, then I would say step away from that deal. So let's take a look at the three main portions of an operating statement: the income portion, the expenses portion, and the capital expenses portion. So let's jump down to the period. We definitely want to be mindful of the period because that'll give us the time frame in which all of these events occurred, whether it be income or expenses. Let's start with the base rent. This is just the sum of all the rents that we collected from the tenants. Now, there is one thing that you want to be aware of as well is from each tenant, we collected two different amounts of rent. If you recall, the first portion of the year, January and February, we collected the older rate, and between March and December, we collected the new rate, right? We bumped the rent up to the allowed amount, which will give us the new rental rate. So take a look at the formula bar here. What we did was we took the old rate, multiplied it by 2, and then took the new rate and multiplied it by 10 because the old rent was for 2 months and the new rental rate was for 10 months. And what we did there was we referenced a cell from the rent roll. Now, if you recall from the first video, all you have to do is really just extract these totals from the rent rates. Here are the formulas so you can read them a little easier. Okay, so moving along here, we just use a very similar formula for the pet rent and the parking. With laundry, we didn't have that in the rent roll. So we basically are just getting that for the first time, and that's just over $2,800 there. Grand total, $164,936.70. So that's the total amount of income that 2019 produced. So moving on to the operating expenses, these are the most common categories that you'll see for all of the expenses. Now, some people might use all of them, some people might use some of them. This is just a general guideline, and there's a good chance that you will see a lot of these categories in any operating statement that you see. So in order to save some time, I've created a cheat sheet for you guys to take a look at. Now, the examples that I provided for each category, those aren't the only examples that you might see. It's definitely not limited to what I have on the cheat sheet, but they are good examples. Really quick, just to elaborate a little bit on the management fee. Generally, you'll see that fee from professional property managers anywhere from 3% to maybe even 12, 15%. It really depends on how much income the property produces. Just a little word of advice, I would spend a good amount of time trying to find and vet the most qualified person or group to manage your property. Of course, you could always do it yourself, but you are asking for a lot of headaches. Just for an example, do you really want to receive a call at 2 in the morning when a pipe breaks and you have to attend to it? Moving on to the vacancy category or item here, we didn't have any vacancies. All of the units are filled in this building, so we have 0 listed there. But take note, we will talk about this particular expense in our next video, and it's a pretty important one. So here's the total operating expense and the ratio in relation to the income, 44%, pretty solid if you ask me. Now, NOI, what does that stand for? That stands for net operating income, and that's a very important number right there. So for us, it totals $92,233.23. Keep in mind that this is an income property and that we need to treat it like any other business. How much money does this business produce? Well, now that we have the total amount of expenses, we can calculate the net operating income. Now, we will talk more about this metric or this number again in the future as it's really important. For now, just keep in mind that it's total income minus total expenses. Last but not least, we have our capital items or capital expenditures. Now, these expenses are separate from the NOI, so they are not included into the NOI. So commissions, tenant improvements, we didn't spend anything there, thankfully. For CapEx or capital expenditure, we built a new patio or deck for a tenant. Now, I'll give you a cheat sheet on a quick description of these line items as well. Well, thanks for joining today. I'm happy that you guys stuck through it. I know it's not the most exciting stuff, but look out for the next video where we'll jump into pro formas and things will start to get a little bit more exciting. See you at the next one.